Back in the action here once again. It's about that time of day again here, folks. Time to get back to work. It's Wednesday afternoon. It's September the 18th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, don't forget I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to help you guys find the best levels of support and resistance, the best entry and exit setups, and most importantly, the biggest traps to avoid to keep all that money in our account and keep that account growing for tomorrow. That's Thursday's trading session. And we have quite a bit to talk about here tonight on the video. We survived the FOMC report here this afternoon, barely, right? Some bumps and bruises, but a very good day right after the FOMC report came out. We got rollover to talk about. We got some big news coming later on this week that will impact tomorrow's market as well. Then we'll grab the charts, we'll grab some oil, some S&P, some Nasdaq, some gold, some euro. We're going to break all this down for you guys tonight on this video newsletter. I'm going to start first with that black gold, that Texas tea. I'll tell you, crude oil looks like it's got a cinder block wrapped around its ankles and tossed in the river right now. Very, very bearish, pinned to its lows, and that tells me that sellers are waiting for their time to strike. Let's grab that oil chart here. Let's kick this session off tonight with that black gold, that Texas tea, that crude oil futures. What do we know about oil right now? Well, we know the market is bearish, that's for sure. No doubt about that. We also know that every time this market has poked its head up above that moving average, it's been sold right back down. And as you can see, there really hasn't been any pullbacks here on crude oil. And anytime I see a market that just keeps kind of almost like a slinky, right? Kind of keeps on grinding lower, that tells me one very important clue, and that is everybody who's been trying to sell high, they're still waiting. So right now, there's a big long line out the door probably of people trying to sell the next time this market pops higher. And so, of course, that's definitely on my radar here tomorrow on oil. I definitely want to be a seller on the next pullback. Now, sometimes when these markets are kind of slinking lower here, like I mentioned earlier, sometimes these pullbacks can be really, really strong. So we'll talk about a couple different conditions tonight for shallow pullbacks, for deep pullbacks, or even possibly a reversal up off of that low, because as you can see, I've got some key levels of support down there just below that $57 a barrel. I'm watching this as a bear market. I'm looking to sell up off that high here right now, but again, because we haven't got any pullbacks recently, we're definitely anticipating something. Is it a small pullback? Is it a large pullback? Does it go sideways before it pulls back? We'll talk all about all the details tonight on this video. So if you're an oil trader like I am, you definitely want to make sure you stay tuned for this oil report tonight. How about some S&P? S&P, as you can see here, very bullish after the FOMC announcement this afternoon. What do we call this? This is a spike, right? This is a very strong spike. Now, anytime I see a spike on the chart, I always know to look for one of three different chart patterns that usually follow. And we'll talk about those three different chart patterns. Anytime you see a spike on the chart, always looking for these three very simple chart patterns. We'll talk about that tonight here on the video. But really the most important clue that we see on this S&P is what I kind of call a velocity area. And that area is right down around that big round number at 3,000. And that you can see here is where I'm finding my buy zone. So I'm going to talk more about what I refer to as a velocity area and why it's important to my trading. And of course, I also want to look for a chance to buy this bull market, right? It's obviously a bull market. I want to buy a pullback right now. On that pullback, is it a shallow pullback? Is it a deep pullback? What are the patterns we're looking for here? I've got three different patterns I'm going to be watching here on that pullback for tomorrow. I'm also keeping my eyes on that pendulum swing target, just about that 30.18 area, because if we don't pull back, I do want to participate in this market going higher, but I have to use a very specific entry setup so I don't get caught buying too high. We'll talk about those velocity levels. We'll talk about the pullback entry setups. Most importantly, we'll talk about if this market keeps grinding higher here for us here tonight on the video. Over on the Nasdaq is very similar to the S&P, very bullish coming out of that FOMC announcement. That tells me, of course, that big strong spike, right? That big strong spike going higher. Spikes on the chart tell me to look for 3 chart patterns. And of course, anytime I see this much strength in one direction, I'm looking for a pullback and a retest of that high, and potentially all the way up to fill that pendulum swing that we've been watching all week on this video newsletter. Now, how do I know where the buy zone is? How do I know where to be a buyer on this Nasdaq tomorrow? I've got my eyes on this area because of those velocity levels, those velocity moves on this market. We'll talk a lot about those in more detail tonight on the video, but I'm definitely looking to be a buyer here, right, on that Nasdaq. And again, we'll talk about those 3 different chart patterns along with my favorite entry setups to buy that pullback so we can properly get the trigger we need so we take a small risk and get a big reward tomorrow on the NQ. Over on the gold here tonight, gold, of course, making a strong run lower after the FOMC report. Now, be careful on this because we have a couple different things happening, right? There's a couple cooks in the kitchen, so to speak, on this gold right now. First of all being it's a very, very strong move down. And anytime we see a strong move in one direction like this, we've got to expect another leg in the same direction. The problem is, right, where are we? We're underneath that range now, aren't we? Right, aren't we? We filled the gap over the weekend, and now it looks like this market will eventually end up back inside that range tomorrow. But I'll tell you, very difficult for me to want to be a buyer on this market when I've got all of this bearishness that still is left, right, unfinished. So we know the market's bearish, but we know we're underneath a trading range. I've got one very specific pattern. If you watch the video every evening, you probably know which pattern I'm talking about. One very specific pattern to buy off of those lows. I'll also put a plan together here for us if the market keeps going higher here because we don't want to chase after it back inside that trading range. So buying low, buying high, what, or possibly how would we feel confident being a seller on this gold? We'll talk about what I need to see to feel confident being a bear on this market tomorrow. But for right now, though, I'm going to respect the bear momentum and look for a buy entry signal to buy up, back up into that trading range, and possibly even a big pendulum swing all the way back up to the opposite side here later on this week as we get a big report coming out or big news on Friday morning that may finish off that move for us. We'll talk more about gold here in a moment tonight on the video. And of course, last but not least here is the euro. Now, gold was pushing lower below a range. The euro pushed on lower into a range. Now, this is one of those kind of hidden trading ranges, as you can see here. Very strong move down. There's no doubt about that. And just like on gold, anytime we see a strong move like this, we have to expect those bears are going to make a very good effort, right, to get back down to retest that low. And that's exactly what I'm hoping for. I'm hoping that we do get that next leg lower so I can then buy this thing going right back up into that trading range. It's a range-bound market with a bearish bias to it. Anytime I see a range-bound market, I always want to buy low. I always want to sell high, right? We'll talk about the best entry setups to sell high. And of course, because it will be counter to the bearish trend, a slightly different pattern setup to buy underneath that low. And of course, anytime we talk about ranges, we'll also talk about breakouts. We'll talk about my favorite breakout patterns tonight on the euro for tomorrow as well. So as you can see, get a lot to cover here tonight. We get the euro, the gold, the Nasdaq, the S&P, the crude oil. Before we jump in, though, tonight's video, before we put all of these pieces together and plot our entries and exits for tomorrow, I just want to remind you to make sure you join our mailing list. You may not be aware of this, but I send out an email every evening right before our nightly newsletter goes live. And I want to make sure that you get that email. That way you never miss another great video and you've got the first crack at it. Now, all I need from you is your name, a real email address, and then hit that subscribe now button. Oh, and don't forget, when you hit that subscribe now on the right-hand side, your job isn't over yet because you still need to go in and check your email. I'm going to send you a welcome email with a verification link. Inside that welcome email, there's a verification link. I need you to verify that you got the email so I can keep sending you emails every evening like clockwork. And don't forget, guys, sometimes those welcome emails, they do get stuck in your spam filter, so make sure you check your spam, check your junk, and whitelist, right, everything from School of Trade, right, and Joseph James. Now that you guys know how to join the mailing list, I also want to encourage you, if you have any questions about anything we talk about in tonight's video newsletter, maybe it's about charts or markets or strategy, right, whatever questions you might have, I always welcome those questions. Just post them in the comments section right below this video. And after you're done writing down your questions down there, do me a big favor, will you? Hit that thumbs up button here on YouTube, because believe it or not, every time you hit that thumbs up button, it helps to expose this video to other traders who we all know would love to learn this trading strategy. So grab that thumbs up button, toss some questions in the comment section below. Always appreciate your time here every evening on this video newsletter. And also don't forget too, if you don't want to drop the questions in the comment section, if you feel like calling me here in the office, I always love speaking to you guys and gals. You know, unlike most websites where there is no phone, right, to call, I'm always here. That telephone, right, will always be available for you guys to call the office if you have any questions about brokers, charts, data feeds, anything that goes into starting your new trading career. I'll tell you, there's a lot of misinformation out there on the internet, and I'd rather make sure that you get the right information early in your trading career so you're not wasting time and money like I did when I was in your shoes. And don't forget, right, you can also call the office and ask for more information about our free trading classes or our free pass to our trade room. So don't be afraid to use that toll-free phone number or that live support tool in the upper right-hand corner, because my wife Megan and I are always standing by here to answer all your questions. All right, great to be here with you once again. Drop those questions in the comments section. Hit that thumbs up button, and don't be afraid to call me anytime you have any questions going forward. In the meantime, let's get to work here tonight, shall we? Tomorrow, let's get prepped up for it. Tomorrow's Thursday, Thirsty Thursday, Reaction Thursday. Tomorrow will be a very, very busy day. In fact, I would imagine tomorrow will probably be the best day of the week for a lot of us, especially in our trade room. Tomorrow, Thursday, September the 19th. Now, why do I say that? Why do I say tomorrow should be a pretty good day? Well, first of all, remember, we just came out of that FOMC announcement this afternoon. And remember, a lot of professional traders, they don't even look at charts on FOMC afternoons, right? Like I mentioned last night on the newsletter, professional traders will make their money early in the morning, but they're not going to try to wrestle, right, that chaos that comes after that FOMC announcement. So a lot of people are on the golf course this afternoon, right? They're not looking at their charts. What they'll do is they'll come back tomorrow and they'll trade the reaction to the FOMC announcement. So tomorrow is what I kind of call Reaction Thursday. It's the Thursday after that big FOMC meeting announcement. This is where all the professionals now come back to their desks and now get back to work in the markets. There's one more reason why I expect tomorrow to be a pretty good day, and that is because the following day is Quadruple Witching. Now, Quad Witching, just in case you're not familiar with the term, Quad Witching is just like Triple Witching, right, where 3 different asset classes expire, also known as options expiration. Well, think of Quadruple Witching kind of like options expiration on steroids a little bit, because just like the name suggests, Quadruple Witching means all 4 asset classes are expiring at the end of the day on Friday. Now, why is that important to you? You might be looking at this going, man, I'm not an options trader, so why does this matter to me? Well, it matters to you because there is a self-fulfilling prophecy that kicks in on this Quad Witching. The most important thing is Quad Witching is really classified by a day of lower volume and increased volatility. The volatility comes comes from all the people manipulating their portfolios before expiration at the end of the day. The lower volume comes from traders like us who know that volatility is a little bit unpredictable and they stay away, right? Now that creates that self-fulfilling prophecy. And what it means for us tomorrow is there is a definite sense of urgency tomorrow now, as in this will be really the last full trading day of the week, right? And professional traders who have work to do for their clients tomorrow, they're going to really have to make sure they make the most of tomorrow's trading session. So we're kind of sandwiched in between the FOMC announcement and the reaction to that tomorrow, right? And that kind of that scarcity, right, of knowing that Friday is quad witching, right? They don't want to miss out on that last, right, full session of trading. So again, I'm expecting a pretty good day tomorrow. As always, we'll be in our trade room tomorrow morning, bright and early at 8 o'clock Eastern time, which is good too because we got news right out the gate tomorrow. Got the jobless claims and the Philly Fed number at 8:30 Eastern time tomorrow. We also have the existing home sales number at 10 a.m. Eastern time. And if I had to guess off the top of my head, I would say the existing home sales number will probably be the big catalyst for tomorrow morning. Not that I don't love the jobless claims in Philly Fed, but from what's been happening lately, we've seen a lot of the bigger moves, right, in and around that 9:45 to 11 o'clock block each morning. So keep your eyes on that 10 o'clock top of the hour, as we call it, 10 o'clock shock in our trade room tomorrow morning. So don't forget, right, tomorrow morning, get to it early, right? Full session ahead of us tomorrow, 8:30 news, home sales at 10 o'clock, right? We've got the FOMC reaction, and of course, people knowing there's that sense of scarcity ahead of Friday's trading session. And then what's the plan for Friday? Well, we'll come back tomorrow night on tomorrow night's newsletter, and we'll talk about the best strategy for trading that quad witching Friday. So now that you know the plan here or the schedule for tomorrow, don't forget, come out and join us every morning at the opening bell in our trade room. We open up at 8 o'clock Eastern time, Monday through Friday. And let's put the strategy together here for us, shall we? Now, looking at oil here right now, as we mentioned in the introduction, we're very, very bearish here on oil. And of course, I might as well mention too, we have completed contract rollover, as I mentioned in last night's video newsletter. You'll notice now this is the 11.19 contract. We're no longer trading that 10.19 contract any longer here. So make sure you switch over to the 11.19 contract, and that'll make sure we have the same charts going forward. What do we know about the oil right now? We know the market is bearish. Okay, anytime a market is bearish like this, I'm always trying to find levels of resistance to be a seller, right? So what I'll do is I'm going to mark up these lows. I'm going to mark up those highs. That creates a hidden channel, as I call it. That's a great level of resistance. What else do we have here? How about that trend line coming down? Boy, that trend line looks great up there, right? That trend line coming down. Combine that now with the top of that channel, and you've really got a great little area up there, right, acting as resistance, of course, right? What else do we have here for levels of resistance? Well, you'll notice I've got this little tiny range we're drawing in here. If I take that trading range, copy and paste it up, I get this range expansion area, right? This area is a level of resistance that I can use as well. So lots of different levels up around that $59 a barrel area, right? So we know we're bearish. I know I want to be a seller, and I want to sell at resistance. Now, most important thing that I mentioned in the introduction is what we really haven't seen yet. What haven't we seen here on the oil? We haven't seen any decent pullback, and that tells me that a lot of sellers are probably waiting for that opportunity to sell it, right, as it comes off of that low. So let's talk about that, because that's really going to depend on the strength of that pullback. You know, for example, hopefully we get a nice deep pullback up around that trend line coming in overhead, right? Let's talk about that one, for example, because I think that's going to be the one that a lot of people will see that will probably the one, right, we can really rely on here for tomorrow. The most important thing is I want to get that pullback, right, up off the low. Get me up off the low because I don't want to sell low. I want to sell high because if I can sell high, I can take a relatively small amount of risk, right, compared to a much larger amount of reward. This is one of the big reasons why you want to make sure you sell as high as you can without selling, obviously, a bull market, so to speak, right? But you want to sell as high as you can. That way you can get a good risk-reward ratio because the better the risk-reward ratio is, the more attractive that trade becomes to other traders, and the more people trade it, the better your results will be. So when I get that pullback going higher here, what I'm anticipating is a lot of the market will think this is a reversal. The moving average now will follow right underneath it, and I'll bet you're going to see a lot of buyers who will try to buy that pullback to the moving average. Now, once those buyers try to buy that pullback, is the market bullish right now? No, it's definitely still bearish, isn't it? In fact, we're bearish and now we're up off that low and we are up at resistance. This is a horrible place to be buying. It's a great place, though, to look for those buyers to fail. And this will set up for my favorite combination patterns. And that is a failure pattern, right? Basically, a buyer pullback failure, a failure pattern into a pullback combination. Now, usually what happens on these is you'll get the failure just below the moving average, then that market will pull back, right, up into the moving average as it rolls back over. You can see an example back here, actually. Look left back here. It's a great example back here. We go up, right? The buyers confuse it as being a bull market. It's not a bull market at that point, right? They try to buy off that pullback. And what happens? When they fail, the market collapses back down. And then see what happens? It pulls back, right? And hits that same spot again. That's very, very common, right? Very, very common. Fails, pulls back, right? And goes lower down from there. So that's exactly what I'm looking for on a relatively shallow pullback up into that trend line, right? Moving average comes over. Buyers try to buy off the pullback. And of course, we're looking to sell into their failure, sell that pullback, and back down from there. Now, what if we get a much deeper pullback? Because honestly, right, we haven't seen much of a pullback at all recently. So what if we really pull back, right, nice and far here, right? What if we go all the way up to that 60 area? Now what do we do? Well, the market still is bearish at this point. The problem is that momentum is going to be very, very strong at that point, right? And the buyers are probably not going to give up without much of a fight. So in that situation, what you want to do is you want to use a slightly different variation of that sell setup. No longer just a buyer failure, but let the buyers try once, let them try twice, and once they try twice and you see them fail off that second try, right? Let them try once, let them try twice, and notice, guys, notice how I draw this. It's a lower low, right? Remember, you want those buyers to buy at a lower price. Once you get those buyers buying that lower price, now you know where their stops are, and now we can sell right into those stop losses. And don't forget, too, right, we can always do it as a nested failure, right, into pullback, right? That works too. So there's nothing wrong with that either, right? It'll be a failure pattern. Again, it's a slightly different type of failure pattern. I call this one a nested failure because it's a failure inside of a failure. But again, you can always combine that, right, with a nested failure with that pullback and selling back down we go. Now, what if we don't get any pullback, right? What if there is no pullback whatsoever, right? What if we get no pullback and this market just goes sideways here, right? What if we end up going sideways here in the short term? Because, you know, right, with today's inventory report and, of course, the FOMC announcement, we might, you know, who knows, probably not going to happen, but we might see the market go sideways here. What if the market starts trading sideways inside of this trading range? Now what can we do from there? Can we still sell this market? We can, but anytime I see a trading range environment, I want to buy low, sell high, and avoid the middle. So what I'll do is I'm still going to wait for a move higher. Now we use a two-try failed breakout. You see, guys, whenever we have a range, I know that rookies will try to trade those breakouts. The problem is breakout patterns do not work very well in liquid markets. They work well in other markets, right? Illiquid markets, but they don't work well in real liquid markets. And since this is a liquid market, most breakouts are probably going to fail and end up right back into that range. And you know what else? Rookies like more than breakouts. They like breakout pullbacks. And that's the pattern I look to fail. So I'm waiting for a breakout. I'm waiting for a breakout pullback, right? Again, like I said earlier, the only thing that rookies like more than breakout patterns are breakout pullbacks. And once I see that breakout and I see that breakout pullback, now I know the breakout traders are in, the breakout pullback traders are in. And now once that breakout pullback fails, I'm looking for that sell right back down again. So remember, guys, if you're trading, if the market's bearish and we go sideways into a range, just wait for that breakout, wait to see them buy the pullback. Again, most breakouts in liquid markets are going to fail and will sell right into that failure, right? It'll look a lot like this one back here, right? Little tiny trading range right there. We go up, the buyers try to buy the pullback, right? And it fails right back down again. So that's a great opportunity here if we go sideways. Now that may take some patience tomorrow because obviously we have to wait for the market to break higher here, but that's why I'm with you guys tomorrow in the trade room to make sure you're doing it all the right way and staying patient. Now, how about if we go lower here? Is there any way to be a buyer down here at all? Absolutely. Since I have that double bottom, what I've done is I've marked up that big leg down, I've marked up what I call a measured move or an AB equals CD pattern. If you take the size of that range, that creates a sell area above, resistance above, and it creates support down below. I like the fact that I can kind of mix together, right? I can combine that measured move along with that level of support. Now, don't get me wrong, guys. Just because this is a level of support does not mean it's going to be a reliable buying area. I mean, let's face it, this is a bear market. We don't want to be a buyer, so to speak, in a bear market. So if we do go lower and want to be a buyer on this, I'm looking for one very specific pattern, which I call a crown reversal. And a crown reversal starts off with that strong move down. I'm going to want to make sure we get down to that measured move. Then I'm looking for sellers to try to sell it. They'll fail to retest that low. I'm looking for a higher high in price, another round going lower, and I'm looking for a trap low on this, right? And this is what the basic pattern looks like. Some of them are a lot easier to see than others. You can see an example of back here, right? Strong move down, bears try once, they fail, bears try twice, trap low, and back up off that low. You can see that same pattern there, okay? Now, once we get down to that low, wait for that one, right? That two, that three, and then buying back up. So again, I call this a crown reversal pattern. Got to get that measured move. Try once, no new lower low. Try twice. Remember, higher highs there. Sellers want to sell high. Remember, try twice and get that trap low off of that low. So that's going to be an easy way to buy underneath this channel low if we get that opportunity. Now, the one thing I haven't talked about here yet is what's a breakout look like? How does this market turn bullish? Well, one pattern I always look for to reverse the trend is called a 1-2-3 reversal. 1-2-3 reversal. And it's just like the name suggests. Strong move up is 1. 2 is a pullback to the moving average. And 3 is going to be a strong move off the moving average. That's the key. I want to see that strong move up off the moving average. Now, once you get that strong move off the moving average, now you can mark up that high. That'll draw your trend line. Take that trend line now, find your hidden channel, mark up that prior high, and then I can look to buy that pullback from there, right? That's what I call a 1-2-3 reversal into a hidden channel pullback. Now, that pattern will also work to the downside, guys. So don't be afraid if the market goes lower here. It'll also work to the downside, right? So 1-2-3 breakout, mark that low, mark that high, and we're trying to sell, right, up off of that high. So we'll definitely be keeping our eyes open for breakouts, with tomorrow being Reaction Thursday. And again, that kind of little sandwich between the FOMC and Quad Witching. You never know, right? We might definitely see that breakout in either direction. But at least now you know what my general strategy is for tomorrow, right? Failure patterns, buying low, selling high, and most importantly, I'm going to make the move now to the S&P to keep this newsletter going. But if you're here for the first time today, you might be wondering, where can I get more information on all of these entry patterns, failure patterns, nested patterns, and everything we talked about here so far? So if you're here for the first time today, I would encourage you, make sure you get registered for our free trading classes. Our free course, you can register in the upper right-hand corner. I'll also put a big red button for you guys on the website right below us here on the blog at Sideways Markets. But grab that link in the upper right-hand corner. Get registered as a member of our free trading classes. As part of that free course, you'll learn my 4 favorite entry setups. You'll learn my 3-step trading strategy. I'll also send you an invite to join the trade room, right, as a guest on our free pass. So definitely grab that free course, especially if you're a new trader, because I promise you it will make you completely change the way you look at these financial markets. People love that free course, and I know you will as well. In the meantime, though, while you register for the free class, let's keep moving here now over to the S&P. The S&P, as you can see, is bullish with a capital bullish right now, a very, very strong move going higher. Now, anytime I see a strong move like this, I always expect to see one of 3 chart patterns. The first one is what's called a spike and channel. And a spike and channel is what's most common after a spike in the market. Second one, right, also relatively common, right, is a spike and range. And a third is a spike into a flag. These are the 3 most common patterns or chart patterns you'll see after we see a spike, and all 3 of them really tell us exactly where to look for the best entry setup. For example, on the first one, a spike and channel always tells me to look for a deep pullback down towards the base of that channel and look to be a buyer with that nice deep pullback. The range-bound market tells me to look for a 2-try failure below the range. And the flag pattern, last but not least, the flag pattern tells me I want to go up, wait for a trap high, and sell into the failure off the top of that channel. So those are 3 different chart patterns. All 3 of those chart patterns tell me exactly where I want to be looking for that entry opportunity tomorrow morning. So now that I go back to my chart now, I can easily see there's my strong move up. And what I'm doing here is I'm marking up these highs. I'm adding a midline to try to get this little hidden, right, kind of like a hidden variation of that spike and channel. Where's the base of that channel? It's down, right? It's down here. So that's definitely where a spike and channel will tell us to look for a buy setup tomorrow. What else could we be here? How about a range, right? Spike and range. Maybe we go sideways. I got the gap filled there at 3,009, right? What if we go sideways? If we go sideways up here, it's a buy below the range. What's my favorite pattern? My favorite pattern is that 2-try failure. Remember, rookies love to trade breakouts. In fact, what they like more than breakouts are breakout pullbacks. So in a range-bound market, anytime I think range, anytime I see a range, I'm always thinking, just give me a breakout pullback pattern and let me buy right into those stop losses. Now, the hardest one, as I mentioned before, right, is going to be the flag. Flag patterns are always a little bit challenging because you got to remember, flag patterns are bear channels. And so they will feel like the market is turned bearish. But there's one easy giveaway that you know it's not a reversal: the speed of the market. One of the things you'll notice about a flag pattern is flag patterns are extremely slow excuse me, when they pull back. Okay, it's one of the key characteristics, it's one of the easy giveaways that it's a flag, it's not a reversal. Trust me, if this market reverses, what will happen is it'll pull back once, twice, and it will dump, right? If this thing reverses, it will puke and push all the way back down to that low very, very quickly, right? There'll be a lot of action going lower. You'll know it's a flag because a flag pattern will pull back very slowly, right? Very slowly as it pulls back. And that's not just for the S&P, that's for any market, right? Flag patterns are notorious for those slow pullbacks. The best way to trade a flag pattern is to anticipate that sellers are going to think this market has turned bearish and they're going to be waiting to sell up above these highs, right? They'll look for that trap high. And that's exactly what I want to see. I want to see sellers try to get in off of that move higher, and then I'm looking for a breakout pullback, effectively now buying off the top of that channel. But more importantly, in this situation, you've got sellers now who are roped in on the wrong side of the market. And when those sellers realize they're wrong, what are they going to do? They're going to get out of their positions, and the only way to get out, you can't run, right? You can't run and hide. If you're in a short position and you got to get out, you got to be a buyer. And so in those situations, the sellers are now buyers and the buyers are buyers, and it's a recipe for a very, very strong move going higher. Now, all of our targets right now are up around that pendulum swing at 30.18. We talked about that earlier this week. And then, of course, the major high up there at 30.25, right? That major high from just after rollover, right, last week. So now we know those three different scenarios here. But there's one thing I want to point out here, right, on this S&P tonight, and that is what I call velocity zones. Okay, when I say velocity zones, what I'm referring to is that area on the chart where the speed of the market starts to really pick up the pace, right? It really kind of rushes. You have this kind of vacuum, right, as the market runs higher. You know, look back in time here, right? We see a pullback, we see a pullback, we see a pullback, and then we get this rush, right, going higher, and then pullback, pullback, pullback. See, here's the deal, right? Where this market rushes higher, imagine now a big line of buyers, right? They were all waiting there. All those buyers, they were waiting for that pullback. They were waiting for that pullback. The buyers were waiting for that pullback, and it never came. So anytime I see a velocity area, right? In other words, anytime I see a bunch of big candlesticks back to back to back like that have no pullbacks, even better, this one even hiccuped on the way up, right? See that little close right there? See that close right there? You can see, right? The close of that candle, it then kind of hiccuped and pulled down, right? It gapped low and then went right back up. That gap is a huge giveaway that there was more, right? There was literally more buyers than enough sellers in the market, just railed higher. What that means is a lot of buyers, a lot of conservative professional buyers are waiting down in this area. And that's where I create my battle zone. That's where I know now I really want to try to be a buyer on this. So we talked about some setups on oil, but oil was a bear market. So what's the best way to buy, right, in a bull market? Well, again, I want to see a pullback. And ideally, I want to get that pullback below the moving average. In my experience, guys, the best trades are always going to start off with that little pullback below the moving average. What happens is when a market goes back below the moving average like this, the strength of that move lower makes a lot of the rookie sellers or rookie traders think this is a reversal. Professional traders know better, right? We wait for a significant 1, 2 before we go in the opposite direction, right? A market that's moving this fast right now, those buyers will try once, they'll try twice, and then they'll fail from there. So just seeing a strong move down, right, is not going to be a reversal, right? And we'll talk about a reversal pattern in a moment on this. So I know that when I can get below that moving average, I now know I have the weak hands in the market in a very impulsive position to try to sell that pullback. You know, I made this mistake all the time when I was a rookie, right? I would see the market pull back nice and deep. I would make up some reason why there was some random level of resistance up here, right? Oh, it's the weekly pivot. Oh, it's the 200 EMA. Whatever, right? Whatever reasoning I would use to justify it. And I would say, oh, we've gone too far, right? And try to sell off that moving average. The problem is we have not gone too far, right? The market has never gone too far until it tells you so. And we'll talk about when it tells us here in a moment here. Looking for that pullback now, right, off of that moving average. I want to see those sellers, right, commit to a position now off that moving average. Once they do, now I know exactly where their pain is, right? Now I know where their pain point is. Now I know where, if this market starts going higher again, now I know where all those counter trend sellers in this case, now I know where they have no choice but to exit for a loss. And I'll put my buy order right above that high, right? Look for that failure. And then, of course, that moving average comes over, and we almost always get that pullback for that failure into pullback combination. Now, there's also a chance we may get a much deeper pullback, right, down into the real depths of that buy zone. So if we do see a deeper pullback here, we want to use that nested failure, right? That one try, that two try, and then back up from there, right? And this can be a little bit of a learning curve, right? Shallow pullback, look for a straight failure. Really deep pullback, look for that nested two try. Sometimes we get the one, two legs for the pullback. We draw that trend line overhead, and we use that two-legged pullback pattern, right, which we talk about quite a bit on this newsletter, right? One try for the bears, two try for the bears, draw that trend line down, get up and over, right, and use that trend line as we go back up again to retest that high. Now, we've talked about pullbacks. What would a reversal look like, right? Reversals, 1, 2, 3 reversal, as we talked about earlier on oil. 1, strong move down. 2, pull back to the moving average. 3 is that strong jump off the moving average. At that point now, I'm going to mark up that trend line, find my channel. I'm going to mark up that high. There's my sweet spot now, and I'm selling off the top of that channel. Target's pretty easy. Back down to retest these lows here for the S&P tomorrow morning. So again, I'm not opposed to being a seller, but I'm not going to try to go against the momentum of this market. Don't forget to, again, if we do go sideways up here, if we do end up chopping around here, just stay patient, wait for that breakout, pullback, right, and buy right into the failure of that breakout pullback. We call it a two-try failure pattern. All it really is it's a breakout pullback failure. Now, what if we keep going higher? Right? What if this thing keeps going higher here? If it keeps going higher into a smaller spike in channel, then we know to mark up the base of that channel, right? And we look for that pullback. I look to get the moving average coming over, get those sellers to commit off the moving average. That now sets the table for a failure into pullback combination and that run back up to retest the high. So even if this market keeps on pushing higher, stay patient, wait patiently here. We don't want to chase after this move, especially seeing such velocity, right, on this move going higher. I'm waiting for that pullback right now. I may have to wait a little bit longer than I want, but luckily I got a comfortable chair, right? Plenty of good music in the office to listen to, and we'll stay patient for it. Now again, like I mentioned earlier, if you want a deeper dive into all of these patterns, grab that free course in the upper right hand corner. I'll also put a big red button for you guys right below the video tonight on the trading blog at Sideways Markets. So grab that free course. In the meantime, how about the Nasdaq? The Nasdaq is almost identical, right, to the S&P. We know we have that big bull run up. We know that big bull run up. One very common pattern is that spike in channel. I've created this, right, kind of wider spike in channel. Okay, we also know there might be a range up here, right? Spike up into a range, or we may get that flag pattern. Remember, the flag patterns are notorious for being very slow, right? During that pullback, you'll notice it'll be like pulling teeth, getting this market to pull back. If you see it really slow like that, that's your giveaway. That's your giveaway. That is a flag. So we talked about those three patterns already on the S&P. Those will apply here, right, on the Nasdaq. No matter what we do, the buyers are trying to get up to return that pendulum swing at 79.56. Remember, in case you're here for the first time here tonight, right, earlier this week we had a trading range on the E-minis. This also applies to the S&P as well, by the way. The amount of the move below the range is the amount of the move above the range, and that gives me now, right, that pendulum swing target. So just in case you missed the beginning of this week's newsletter, right, that will of course kind of bring you up to speed on where the big target is here overhead. And really at this point now, right, we're really left waiting for a pullback here on the E-mini Nasdaq. Again, you can see we get pullback, we get pullback, we get pullback, and then all that velocity, right? All of that strength here going higher. And with the velocity now, right? With the velocity now going so higher, again, imagine now there are a bunch of buyers. They got their lunches all packed, right? Their boots are on, their helmets are ready. They're ready to go to work, right? The buyers are all hanging out there, right? They're hardworking buyers. They're still waiting here, right? They're still waiting for that pullback right now. They never got it. And so all those buyers, right, cute little guys, aren't they, right? All those buyers now are just waiting to gobble up that pullback and finish off that pendulum swing. Now, again, right, I want to really pay attention to how the market pulls back. For example, is it a shallow pullback, relatively shallow? Below the moving average, seller failure off the moving average, right, into a bullish pullback going higher, that failure into pullback combination? Or do we really get that deep pullback below that moving average? Look for the 1, look for that 2, right, that nested failure, that 1 and 2. Again, there is definitely a learning curve to that, right? How do you know which one to use? If we just barely get below that moving average, those sellers are going to be trying to get that reversal, buy into their failure and buy back up again. But if it really pushes below that moving average now and you get some good separation away from it, now you got to think those bears, they're going to try once. They're not going to give up that easily, but a fight, right? You're going to want to make sure you buy after they try twice if we really plumb those lows here. Then don't forget that two-legged pullback, right? That two-legged move lower. These are somewhat common, so watch that trend line coming down. Use that trend line as a level of support overhead. We call it a 2LP, by the way, right? Two-legged pullback on the pattern illustration there. And again, you'll learn a lot more about these entry setups in that free trading class in the upper right-hand corner, or that big red button below the video tonight on the trading blog. What else are we talking about here? What if the market keeps going higher, right? What if it keeps going higher? If it keeps going higher here, right, if we keep going higher here inside this very small channel, then what I'll do is I'll reassess the situation. Remember, a spike in channel tells me deep pullback, right? Base of that channel, moving average comes over. Sellers want to sell off the pullback. It's not a bear market yet. It's a bull market. It's just a pullback. In a bull market, sellers fail, buyers buy the pullback. I'm looking for that seller failure into that bullish pullback pattern there, right, as we go. Remember, the only thing we got to worry about here tomorrow morning is the range, right? As we go sideways instead of a range, breakout, pullback, failure, back up into that trading range. And then last but not least, what does a reversal look like? Reversal, strong move below the moving average, pull back to the moving average. And remember, at this point now, we're looking for that failure right back up again, right? Nice. Remember, when we get below that moving average, now we can risk small for a nice big reward. That's a prime buy for those professional buyers. But if the sellers, if they can hold it, if they can give me a good jump off that moving average, fine by me. Mark up that low, mark the new trend line, mark the channel high, and then, of course, we'll sell. Yeah, we'll sell up off that high. Target, of course, now back down to retest those lows. So, again, I don't mind being a seller on this, but I need to make sure momentum turns in my favor, because as I always remind you guys on this newsletter, if your goal is to use a small stop loss, like mine is, and all my clients are, right? In fact, I take a lot of pride in the fact that we help our clients at School of Trade use small stop losses. If you want to use a small stop loss on a relatively small account, you're going to have to make sure you respect the short-term momentum. It's very difficult to make money with a small stop loss, okay, no matter how big your target is, if you're going against the short-term momentum. So if you want to be a seller, you can't try picking tops, right? Trying to be a seller on this because you'll keep getting stopped out. All right, guys, we'll talk more about how we use small stops and big targets in that free trading class. And again, right, watch that momentum. Once it turns bearish, then we can sell it on the Nasdaq. How about some gold right now? So gold has a couple things in play. The first thing is we know we have a range on gold, right? That's the big thing. Range-bound markets do what? Buy low, sell high. Anytime I see a trading range on that chart, anytime we see a range on that chart, I want to look for breakout, failure, back in. Breakdown, failure, back in. The key is you want to buy underneath the low, you want to sell above the high, and you want to do whatever it takes to avoid the middle. Buy low, sell high, avoid the middle, and focus on those breakout pullback failures, right? Focus on those breakout pullback failures. Now again, looking at gold in a little bit bigger picture here, right? There's my range this week. We went up. The buyers tried to buy the pullback, and surprise, they failed and ran right back down into that trading range, right? Bears take it lower. They try to sell the pullback. Surprise, right? They fail. We should not be surprised. This is very, very common stuff here. And if this is the first time you've noticed this, well, welcome to the party, right? This is the best part about range-bound markets. They are very simple, right, in that sense. So don't let ranges, don't let the ugliness of a range make you think you can't find some great setups coming off that range. So we know we want to be a buyer down here at these lows, right? We're down below the low of this range. I want to be a buyer coming off of that low. Here's the other problem, or here's the big problem we have in buying off that low. Look at that momentum, right? That is one hell of a move lower. Now, obviously, this was based on FOMC, right? So FOMC comes out 2 o'clock Eastern time, right? 1400 hours, and the market just pukes, right, and runs back lower. Now, there is a chance, again, because tomorrow is Reaction Thursday, there is a chance that this strong move down will just turn right around and go right back up again. There definitely is that chance right now. There's always that chance, right? Any market, put it this way, any market that can run that far, that quickly, can easily reverse and go right back up again. So I'm not going to say we can't go higher, but I'm going to tell you right now, from my experience, anytime you see this much momentum in one direction, you've got to really expect those sellers to try very hard to retest that low. So sellers are looking to try to retest that low at 1490 and change, and they're going to try twice to get there. You'll notice here we get a big move down. They've tried once now. They're trying twice now. And what I really want right now is I want to get my hands on a crown reversal, right? A crown reversal. Now, a crown reversal pattern, we talked about this earlier. I believe it was on oil, right? Remember, oil had a range there. So we talked about this pattern earlier on oil, and basically it's a reversal pattern. We don't really need, so to speak, a reversal pattern on a range because ranges are balanced. We know the range has kind of a magnet, drawing that market back up. But let's face it, this move lower is really strong. And so even though I don't need a full-blown reversal on this, I'm going to choose to be a little bit more conservative on this because it was FOMC and look for that trap low, or at the very least, look for a double bottom off of that 93.8. If I can get that trap low, or at the very least that double bottom, what I'm going to look for is on a faster time frame here as that moving average comes over. I'm looking for it. Imagine now, right, we go lower. Then I'm looking for a very small little failure setup. And again, this will be on a much faster time frame, obviously. I'll get the signal off the trap low, then look to time the entry, right, into that failure. And then maybe if I'm lucky, I don't think I'm going to get that pullback here, but hopefully I will. That failure, right, into a pullback, going up, back up into that trading range. Now, what if I'm wrong about this, right? What if the market just runs back up, right? What if it runs back up into that range? Now what I'll do is I'm going to mark up a trend line off these highs, bring it down to that major low, and look for a buy off that trend line before we get, right? Before we get back into that trading range. So really there are two basic ideas here, right, for this setup. Let's get rid of this channel here. It's not really necessary. I want to put it on there just to kind of illustrate it for you, right? So imagine now, right, we get that trap low, right, or double bottom, right? We get that trap low or double bottom. Moving average comes over now. Now we look for that on a faster time frame, right? That seller failure pattern. Remember, we're a range here, right? So the market will want to go back up into that range. We then look for, if I was a seller, where would my stops be? Be right above that high, right? So what I want to do is I want to buy into those stops and then again, look for the pullback. Now, we may not get that pullback. This thing might just get lit right up and run back up into that range, right? We don't get that pullback. But if we do, right, I can add another contract to the position, right, as we run back up into that trading range. Does that make sense, right? So in other words, it's a crown reversal pattern, but because the size of that momentum is so strong, crown reversal, pullback failure, right, failure setup, into a pullback pattern and then running, right, as we go higher from there. Now, some other food for thought here again is what if I'm wrong, right? What if the market just takes off to the upside here and runs higher? What I'll do in that situation is I'll draw the trend line off the highs up here, bring it down to that low, and then look to use that low, right, as my key level of support there to be a buyer off of, right, the low of that channel, et cetera, et cetera. What will probably happen, though, is we'll probably end up going up like that, and you'll probably end up seeing either a trap setup, right? A trap into a failure and back up, right? So trap low below that prior swing. Because you got to remember, nobody's going to want to buy it as it goes higher, right? As we get closer back into that range, nobody wants to buy back up into that range. So trap pattern off the low, right? Failure pattern off the moving average and back up into that range. Now, trap patterns are another great entry pattern. We haven't talked about a lot about them tonight, but we do talk about them every morning in our trade room. And again, you can learn more about those patterns, right, inside that free trading course. Now, the one thing I also want to keep in mind is obviously here now, what if it just dumps? Right? What if it keeps running lower? If it does keep running lower, now this becomes a measured move. So you can kind of imagine now, right? If this thing does run lower, you can kind of imagine now where that next objective would be if the market runs lower, right? That next objective down around, what is that, 1474.8, right? So that would be your next objective, right? If the market runs lower, that 1480 is that pendulum swing that we talked about earlier on this week, right? So this whole area down here becomes a great target area for those sellers. But what do we need though, right? What do we need to actually get short on this? To get short on this, what I need is I got to see some proof, right? I got to see that 1, 2, 3 breakout as we go lower. So imagine now 1 strong move down, 2, pull back to the moving average. 3, show me you mean it, right? Show me you mean it, bears. Mark those lows now. Find that hidden channel. And then we're selling, right, off the top of that hidden channel. Again, you know where that target is now, right, down around that measured move. Now, remember, the big problem we have is we don't want to sell underneath the range. So we have to wait patiently for that new breakout of that range, that 1, 2, 3 breakout going lower. Got a pretty good plan there on the yellow metal for tomorrow. Tomorrow should be a pretty busy day on the gold. We had to wait right today because of the FOMC announcement, right? But tomorrow it's game on there for all the yellow metal traders. How about some euro here? Wrapping up tonight here now on the mighty euro. What do we know about the euro? We know the euro is overall bearish, right? That's for sure. What else do we know here? We know that we got a measured move here. 1 leg down, 2 legs down, and it definitely looks like those bears, it definitely looks like they're struggling here to get through this area right now. Okay, that also contributes to what I think is a range. The moving average flattens out, and of course, anytime I see a range-bound market, I'm going to add my levels above, add my levels below, And what exactly is the plan for a range-bound market? Breakout failures, right? Focus on failures. Buy low, sell high, focus on failures. We go up, don't take the breakout, wait for the breakout pullback and sell it as it fails, right? Go down. Now, if we go down, we're trying to be a buyer, but the market's bearish, so we're going to use that variation. What was it called again? A nested variation. You're good. You're good. 1, 2, and then back up from there, right? So keep that in mind because, again, on this euro right now, it's pretty easy to see the market is overall bearish. So for me, I want to buy low, I want to sell high, I want to wait for the market now to try to go higher, get that breakout pullback, let those buyers confirm off that moving average, and we can sell right back down right into that range. Remember, when those buyers buy that breakout pullback, their stops are sitting right below that low, and anybody who's buying breakouts is a rookie in my book. And the one thing we know about rookies is they use very small stop losses, don't they, right? That stop will be sitting right below that low, and all it takes is a little nudge to get those buyers, right, to exit their positions, and now buyers become sellers and sellers are now sellers. Remember though, as we go lower here though, how do we buy off that low? Very patiently, right? Again, we're overall bearish. How do we buy off that low? 1 try for the bears, higher high, higher high. 2 try for the bears, remember that, right? Bears want to sell high, sellers want to sell high. Make them try twice at a higher price. Once you see those 2 tries, now you know you got them right where you need them. And all it takes now is a little bit of a nudge right into those stop losses, and it will snap going right back up to retest that high. That channel is really irrelevant, to be honest with you. I put it on there for illustration. You don't need that channel because as soon as you know you have a range, right, the sooner you know, right, you know what to do. Now, we might want to put that trend line on, right, and use that trend line here. Strong move down, 1, 2, and back up, right? That trend line might be effective as a level of support there. So what I'll do is I'll leave that trend line on, but the overall channel probably not going to be that necessary. How about a breakout? How about a breakout right now? Because it is important to realize that the euro, if you look at this euro on kind of a bigger scale here, you'll notice we're kind of down at the low of that range, right? That big range from earlier on in the month of September. So, I can't call it a bull market yet, but what would a bull market look like? How does this market turn from bearish to bullish? With some strength, right? Strong move up, pull back to the moving average. Remember, don't buy this pullback. This pullback will most likely fail the first time around, but if they do hold that pullback off the moving average, now we've got a breakout, 1, 2, 3 breakout, mark up that high, mark up the new high, find that channel. You got it. Now we're looking to buy that pullback right off the low of that new hidden channel. Target, of course, that point is up to retest those highs here. The bulls want to retest the highs. The bears want to retest those lows. And again, tomorrow, expecting a pretty good day. The one thing we don't want to do tomorrow in the euro is we don't want to get caught chopping around inside that range. Buy low, sell high. Keep your eyes open for a breakout, but don't go trying to predict those breakouts. And as always, guys, I want to encourage you, come execute this strategy with me tomorrow morning at the opening bell. And every morning, we open up at 8 o'clock Eastern Time to get registered as a new member and join me tomorrow morning in our trade room. It's very, very simple. I'll put all the links, if you're on YouTube right now, I'll put all the links in the description of the YouTube video. Or if you look right below the video tonight on the blog, there's a big blue button there, or on the website here at schooloftrade.com. Use the advanced course membership package that includes all access to our trade room, all the video classes. There's a video there to learn more about what's included with our membership. If you're not ready yet to be a member, that's fine by me. Make sure you grab that free trial. Our free trial includes the free trading course, the free pass to our trade room, hundreds of examples of how we apply our 3-step strategy to our favorite futures markets. You're going to love that free trading class. Make sure you register either by using that big red button right to the left of my ugly mug, or again in that upper right-hand corner of this video, right? That link is up there if you're here on YouTube as well. Guys, don't forget, I'm only a phone call or an email away. You can use that toll-free phone number, use that live support tool here, and keep in touch. Tomorrow morning, we open up bright and early. Look forward to seeing you there. If not, come back and see us again tomorrow night on the next edition of our nightly newsletter. I'll be back here same time, same place tomorrow night. As always, guys, thanks for tuning in. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.